With me in the studio is Jeremy Beckwith, Chief Investment Officer for Kleinwort Benson. Thank you for coming in. Now, first of all, how difficult is it now to actually understand where the markets are going? We don't seem to have a clue what the economy is going to do. One day it's going to get better, the other it's going to get worse. It makes your job much more difficult.
Yeah, that's true, but the job's always difficult. We just have to live with that. I think that you can see the markets have got very oversold the last 5 or 6 weeks. We've fallen a very long way very quickly. And there's been lots of news items which have taken it down. But I think we're beginning now to see a base being formed, and I think there's a good chance here in the next 4 to 6 weeks of a bit of a rally, 5–7% in that sort of order. Yeah,
I wanted to actually see your investment strategy. There you go. So you expect the markets to rally for the next couple of weeks, but then on the medium term, there's a lot more concern. So do you suggest that investors play it for the next couple of weeks and then pull back?
Yes, I'd see a rally possibly into sort of mid-July, that sort of thing, about a month. But we've got some big issues coming through in markets. You've got tightening going on in Europe from fiscal austerity, and that's out of weakness. You've got tightening in a lot of the emerging countries out of too much economic strength and fears of inflation. And also you've got the lead indicators rolling over. So all the good news we've had over the last year, it's all sort of running out. And I think over the second half of this year, it's going to be quite hard to see why we should get very excited about markets.
Any specific sectors, or certainly staying away from European equities, buying into US equities or treasuries even?
Yeah, well, we've remained very underweight European equities, I think, over the rest of this year. It does seem that the European economic policy is being designed to take the economy back down towards recession. We do like the US. It still seems to be the economy where they're not tightening policy and where the numbers are coming through reasonably okay.
All right, so we have their overweight US and Japanese equities, underweight European equities. I want to ask you, Jeremy, how does the BP saga actually change your investment strategy? It does seem that dividends may be on the line, possibly not only from BP, but other UK companies.
No, I think the BP situation is very specific. BP have said they may defer or reduce the dividend that's expected with the current political crisis that Obama's forcing on them. I don't see that as being widening out to the market as a whole, so I think dividends look fairly secure. And the corporate sector generally has very strong cash flow and can afford to pay the dividends, so we're quite relaxed about dividend payments ex-BP.
Now, your ideal portfolio, how much cash do you own in here? It seems that equities are so volatile, maybe you want to keep more cash than you did just 6 months ago.
Yeah, well, we've been underweight equities the last couple of months, and we just put a little bit back in for this next month's trade. But I would envisage taking it back out in a month or so's time and looking to be underweight in equities until we get a clear change in policy, certainly monetary policy around the world. I think at some point this year...
That could arrive, what, next year? No sooner than next year?
Well, I don't know. It depends how much of a crisis politicians think we're in. At some point, I think central banks will have to once again start printing money because the tightening of fiscal policy, I think, in the West is getting very, very severe.
Are you not concerned about inflation, and how does that, of course, pan out in your portfolio strategy?
No, we're not concerned about inflation. I think the problem is much more deflation in the West than inflation. There's inflation problems in some of the emerging countries, but they can deal with that by raising interest rates there.
What about corporate bonds and treasuries? Are you looking at buying any of those?
Yeah, I would be tempted to buy them in the second half of the year. I think if we're going to get an equity rally, first of all, that probably means that bonds pull back. But I think it may well be that in July or August there's an opportunity to buy good quality bonds where you're very comfortable you're going to get paid back. And that means distinguishing both within corporates and actually within governments. I certainly wouldn't want to go into some of the more peripheral European government bond markets yet.
Jeremy, thank you so much. Telling viewers there where you have to put your money.